I think crypto can potentially yield very, very large returns for swing traders, as I've seen Cam. Like in this last bull run, I think he ran his account from $84,000 to $1 million,
Yeah, I
in
remember
the
that.
span of
Yeah.
a couple months, which was mad. And he only swing trades, right? And because if you're able to catch the upside volatility and you're able to position yourself, it tends to be like one thing runs and then like another runs, and then so every day something is pumping. Every day you can catch a move. So you got to just like be peeled for those 2, 3, 4 months when everything is ripping, and you can really, really make a ton of money swing trading because you can hold it, because you just like the percentage gains are absolutely bonkers when in crypto. You could see something go up in a single day. Hell, even 50% in a single day.
I agree. I think you should probably swing trade crypto and probably day trade equities. I mean, you can swing trade equities too, but I think day trading equities, if you had to like put them into, rather day trade equities and swing trade crypto. I think it's probably a little bit, safe. I mean, you saw Salza. I mean, go watch Salza's thing. He made 40K swing trading crypto,
What's going on, guys? Welcome back to the Challenge Accepted podcast. In today's episode, we are talking markets, different types of markets, why you should trade certain markets, why you should maybe avoid certain markets. In my experience, in my opinion, there is no such thing as the best market to trade. It really depends. There's so many ways in trading for you to make money, for you to find an edge. But the reality is that different markets move very, very differently. And if you don't know, here at Hydra, we offer CFDs, we offer crypto funded accounts, and we also are about to start offering futures. So for those of you that trade equities, the US markets, day trade them, that's coming to Hydra very soon. And we're very excited to be bringing it to a global audience. So today's topic is going to be all about the markets. I'm going to kickstart things off a little bit because I know there's a lot of buzz about crypto now, especially with Trump being in office and stuff like that. Like, people think that it's going to be probably a good couple of years for crypto potentially to be, regulated, potentially for all these bans and stuff to be kind of lifted. We don't know. We will see. But I started off my trading career, back in the 2020-21 kind of bull run era, where I was busy blowing up my accounts, trading with leverage. And I was trading crypto. I was probably the only person on planet Earth to be losing money while the bull run was ongoing. So, that's a special skill that I developed, the ability to blow up accounts while everything was up only.
Jeez. Yeah,
and I actually
that's
and I actually eventually ended up switching over to trading Forex, as I started to understand trading a little bit more, as I started to develop my own strategies, my own edge. I really realized that like Forex was better for me in a lot of ways. But I'll talk about crypto a little bit first, because that's kind of where I started, and I haven't traded crypto in a long time. I have some buy and hold positions, but like I haven't actively day traded or even swing traded crypto in probably more than a year.
Sure.
Crypto, for me, one of the issues is that it's very, very cyclical, right? It tends to be everything moves in the same direction. If something is moving, it's up, right? If Bitcoin's up, the whole market's up, the whole market's going on a tear. If ETH is on a run, all the altcoins are going on a run, and things tend to move in tandem with each other, which has its pluses and minuses, meaning when things are going long, the market and the trend direction is extremely obvious. Like, just take longs, have a relatively wide stop loss, and you're probably going to make money. Even in Hydra, we've seen during the crypto bull run, a lot of crypto traders made very, very big payouts going long on Bitcoin, because the volatility being extremely one-sided means that longs can be held and you can take advantage of potentially multiple day-long or even week-long moves to the upside, right? And the same with altcoins. Once Bitcoin starts to run, a lot of the altcoins tend to follow as money is flowing into the crypto market. This past bull run, things have been a little bit weird because there's been a lot of like meme coin stuff happening, and ETH hasn't really performed. ETH hasn't really had its own bull run just yet, but the market tends to move together. So, right, plus is tends to be very easy to spot longs. When it's time to go long, it's just obviously long, and you can go in and long multiple markets. You can probably relatively safely use a good amount of leverage, as long as you're protecting yourself in the right way. But the downside is, once the market stops moving, once Bitcoin starts to chop around, once the altcoins, once ETH starts to chop around or starts to go down, everything then goes to the downside or starts to go sideways, and then there's nothing to trade in the market, really. The easy trades are gone, and I've seen a lot of traders blow up their accounts during this period. They made a lot of money when everything was going up, and then they gave it all back and then some more during these periods of, let's say, sideways volatility as opposed to singular direction trends. So that was one of the reasons why I kind of stepped away from crypto a little bit. Another issue for me was like when I was day trading, I was trading lower time frames.
Yeah.
And if I was trading larger accounts, there would be a lot of slippage because the liquidity is not as good. The market caps are very small. So whenever you're looking to take a decent sized amount of risk on, let's say, a $50,000 account or a $100,000 account, generally speaking, I think you're fine trading the top large caps. But anytime you get into some of the smaller caps, you're going to get slipped a lot. And a lot of times if your stop loss gets hit, it's not even going to fill at your stop loss. You're going to get slipped on the stop as well, which makes you lose more than whatever you're intended. And if you're trading lower time frames and scalping, that is a very, very big problem. You can go from, say, you're ready to lose 1 to 2% a trade, that could go up to 3 to 4%, and that's very, very tilting, and I really did not enjoy that. That was actually one of the biggest drivers for me moving over to Forex, because the liquidity was so much better, the markets are much bigger, so I'm able to use more leverage in a safe manner, right? Like if I'm risking 1%, it's going to be 1%. It's not going to potentially be double, which I have seen a lot when I was trading crypto. So the volatility, and the lack of liquidity on the crypto side from when I was scalping and day trading, very small time frames, I realized it's just not for me. So that was one of the very big reasons why I decided to move over to Forex, because I was also looking at Forex prop firms back then when I first found out about props, and a lot of them were offering currencies, and I was like, okay, cool, maybe I'll give this a shot. Maybe I'll take a look at the currencies, see how they move. So I started watching things like EU, UJ, gold, and I found that, wow, like it's just way nicer to actually trade these on a lower time frame because the executions are just way, way, way better. So that's a little bit of an intro into like my background and my experience with crypto and why I switched over to Forex. For those of you guys who, maybe have traded one particular asset class, maybe looking for other asset classes to trade, potentially develop strategies for other asset classes. Hopefully this video will give you some insight, because this is my own personal experience, right? Like, so if some of these things that I'm saying resonates with you, if you're like, oh yeah, like I've had some trades in crypto where I was supposed to lose 2%, I ended up losing 3 or 4. Have a look at currencies, because that's what I was experiencing a lot of times. Now, James also has traded multiple different asset classes in his trading career. James, why don't you give a little bit of an intro, talk about your markets, and let's talk some pros and cons.
Yeah, I used to trade up until probably, I think it was, 2022. I traded just currencies. I mean, I had my first breakout year, my first 6-figure year trading only currencies, because things were just moving in 2020. That's, and then I kind of, 2022, a lot of the guys in the States were starting to transition to moving over to indexes. Just a thing. Maybe it was something in the air. Guys were like, let's trade indexes. It's kind of like the futures things now. By the way, I do want to mention this. I don't understand guys where like futures are better than, or better than CFDs or whatever. You're trading the same thing, dude. If I'm trading US 500 and you're trading it as an ES contract, it's the same. It's really, honestly, it is the same thing. US 500 is ES.
Evan, shots fired.
Yeah, it is ES, dude. No, but it is. It's the same thing. Like, you're just trading it as a. You just like futures more because you were banned by the prop firms because you're American. so you don't have a choice, my friend. You don't have a choice. You have to trade futures. I can decide. No,
U.S. customers welcome at Hydra. By the way, U.S. customers very welcome at Hydra.
Exactly. So no, it's just flipping hilarious. But it's the same thing. If I'm trading US 500, it's the same underlying asset as trading the ES contract. So in 2022, we moved over to the indexes. A lot of guys started trading more indexes. That's where I started to trade the Nasdaq and the S&P 500. And For me, I think 2022 was quite a big down year in terms of like the stock market. So I think we were down like 28% or something in 2022, if I'm not mistaken. So I got slammed trading indexes. I was literally negative on all the indexes except the US 500. So I was like, well, I should have probably just stuck to US 500 then, from my stats from 2022. But I lost money on the Dow and the Nasdaq. But now I think it's good broad. Now I trade the indexes again. I should have probably had a look at the DAX because at that point in time I was making my money currency, so I wasn't really looking elsewhere. But I think that having a good broad like watches right now, I trade mainly the DAX, the S&P 500, and I'm about to pass another hydro account. So yes, I was in drawdown on the funded, but I'm about to pass another one, and most of my money is coming from trading the DAX and S&P 500. So I'm gonna make a full YouTube video on that. I just want to get it passed, and then we'll do it. Most of it's coming from those two tickers. But I did have some nice trades actually yesterday on the yen quote pairs. So I think it's good to have currencies, maybe one or two currencies in index, and some stocks. I love trading Tesla and Nvidia as well on my personal accounts too. So I think a good aspect for that is, and if you notice there, I have a stocks, I've got indexes, stocks, and I've got currencies. I think what's good about that is that you actually don't box yourself into like, okay, I'm only going to trade this. You're going to trade what's actually moving. I think a big thing, and if anyone's watching this and knows Anton Krill, from Goldman Sachs days, he's quite big on YouTube and Twitter, but he says he gets guys coming to him. He's like, I'm going to be a full-time Forex trader. And he's like, well, what happens if Forex moves 20 points for 6 months? We're probably not going to make money no matter how good of a trader you are, because you need to be trading things that are actually moving. So I think it gives me a good broad aspect of the watch list that I've got at the moment. So, yeah.
Yeah, I think it's actually pretty interesting the point that you brought up talking about what's moving, right? I think that's what drew me into the CFD side of things because you can trade such a wide variety of assets, right? Like the way that I look at CFDs, especially in the prop side, is this is like your opportunity to trade multiple markets, right? Because if you look at the products that we offer over here on Hydra, we have on our CFD accounts, we have Bitcoin and ETH. So if you wanted to just trade crypto on the very big pairs, Bitcoin and ETH are day tradable on the CFD side. Like I've taken day trading positions using just the CFD accounts. The spreads are great. Liquidity is good. Like there's absolutely no problem. Our largest payout from last year, Salzer, he made the payout not on our crypto account. He made almost $40,000 payout trading Bitcoin on our CFD accounts. That's just the power of CFDs, right? Like it may not be like the perfect execution if you compare to something like, oh, I'm scalping the NAS 100, compared to a futures CME firm. Like it's never going to be apples to apples because that stuff has like zero spread, right? So, but what I see CFDs as, why I transition over, I was like, oh, cool. Like there's all these currencies, there's gold, very, very liquid stuff, biggest market in the world. And I can also look at indices, right? I can look at the US 500. I can look at US 30, the NAS 100. I can look at something like the DAX. All of these are available as instruments to trade when you're trading CFDs. And it's just almost like a one-stop shop where like I have access to some of the biggest capital markets in the world and I can take a look at what's moving, especially now where I'm swing trading, right? I've been swing trading since last August. I've completely day trading since last August, swing trading only. And that's even more so, like that's made me love CFDs even more because I'm able to watch even more markets and just be like, cool. Like there's sometimes like, for example, the JPY pairs could go 2 months and just be chopping sideways. And then I'm not interested. I'm not even going to look at them, right? Like different pairs, different currencies, even within the currencies basket, because of news or because of certain geopolitical agendas, like things might tend to move in a certain way. And when they are moving, you want to be part of that move, right? Let's say US dollar, when US dollar tends to move, all the XXX USD pairs tend to move. When Europe is going on a boom, right? EU is going to move, very likely GU is going to follow suit, and potentially something like the Swiss franc. So if you are familiar with how the market tends to move, you're able to follow a lot of this stuff, right? Even you can even trade oil on the CFD side. You can even trade silver, although like honestly, like the spread on silver always tends to be a bit high, so I don't even have that on my watch list anymore. But for example, like gold tends to have its own bull and bear markets, right? That's a market on its own. So if the currencies aren't
Not
moving,
right
you
now.
can
That
take a
thing
look
just
at.
goes to the moon.
Yeah, I mean, gold has been on an absolute tear.
Yeah.
Exactly like what we're talking about. Like gold for a very long period before this tremendous run. Like I think it was like around the war, the Ukraine war. Like when that stuff started going off, like gold started on its bull run. But prior to that, I think for a period of like 2 years or something, it was just range bound.
Yeah.
Between the previous all-time high and like it was just chopping sideways up and down. So if you're trading higher time frames, there's not a ton of opportunity there and you probably get chopped up. So you probably weren't watching gold for a while, right? That to me is the power of trading CFDs, meaning you have tons and tons of markets to market select. There is no better product, especially if you're a swing trader. If you're a multi-asset swing trader, you can't even trade futures. Like CFDs is the only way to go, and it is the best way to go. Like if you are with a reputable firm that has good trading conditions, swing trading CFDs to me has been kind of like where I found my home in trading. Really, like I'm very comfortable with executions, very comfortable with strategy, and I just like I vibe with this 1 hour chart execution where I feel like I can just check in a couple times a day. I know when I'm watching the markets what pairs are moving. I know when JPY is on a run and I'm watching the JPY market. So I tend to be able to follow certain markets, and I like that. So it's really about, as James said earlier, it's really about being able to figure out what markets are moving and trading when. But as the topic of this video really is like which market is best for you, James, I want to frame some questions that potentially someone watching this could have.
Yes.
If I'm, let's say, a day trader, right, scalper, that's kind of been your area of expertise.
Yeah.
And I'm just starting out. Let's say I'm within my first year of trading, still like looking for my edge, still starting to be trying to figure things out. Where would you recommend I start? Do you have a market? Like, would you recommend, say, currencies? Because I mean, obviously, if you're a beginner, I wouldn't say, hey, like watch like 10 different markets, but I would probably
No.
say, hey, just watch like one or two, even especially if you're day trading. Do you have a recommendation for where someone could start? Is it equities? Is it currencies? What would you say?
I would say in the indexes, in terms of like, okay, if someone came to me and was like, dude, I want to learn how to day trade, what market should I trade? I would say starting off with indices is probably a good bet. Reason being is they like indices on CFDs tend to have a lot better spreads, a lot better fills than even currencies. They move a little bit better. Sometimes currencies, sometimes currencies can be a little bit more choppier. So, the thing I like about indexes is that they have an open time. So, whether you're trading the DAX, it has an open time. Whether you're trading the US markets, they have an open time. So, I would say come in trade the DAX or the S&P or the NASDAQ or the Dow Jones in that session. So, if you're trading the US markets, trade in the New York session. If you're trading the DAX, trade in the London session. So, that's what I would say. And probably, I wish I'd maybe been given that background maybe a little bit earlier in my trading, and I would have maybe been trading indices a lot more. I've only really been doing it, as I said, I started it in 2022, but I really only kind of been doing it since maybe August last year. June last year was when I kind of picked up trading in the indexes like properly, where I was like, okay, I'm gonna actually start doing this. So that's where I would kind of start, and then you can look to branch out. I would say to swing trade currencies is probably a little bit better. Every market's got its own thing. Currencies don't want to be fluctuating so much, on an intraday basis. You don't want the pound dollar moving 4% on an intraday basis, whereas Tesla and an index can. But you don't
Yeah.
want pound. The central banks don't want them moving on an intraday basis 4%. Whereas, as I said, Tesla can move 15% on an intraday basis. So an index can move 3%. So you want to, from a day trading perspective, indexes and equities are probably the best place to start. That's what I would say. Swing trade currencies.
Yeah, I would probably say the same. Like I've gone from day trading. I would say there are certain currency pairs that are pretty worth day trading. I think UJ gives a lot of intraday volatility. JPY pairs tend to be quite volatile. If you do want to specialize in day trading, gold also tends to move a lot, right? Gold is pretty much always our top traded instrument at the firm.
Yeah.
It's just a lot of people want to trade gold because it moves. It really, it's always top. It's always in top volume traded. Like there's just a lot of people that want to trade gold because it does tend to move. And like EU, UJ, and gold, I would say are three that I would look at if I was looking to intraday trade, the Forex market. And if not, I would say indices. There's a lot of people trading indices, and I think if you're day trading or scalping, take a look at futures firms as well. Because you can get centralized pricing by the CME. Or wait for Hydra to launch. If you're not an American, we're bringing that to the worldwide audience very, very soon. But like there's different ways that different markets that you can look at, but those would be my recommendations. And then, take it from the expert himself, James. He's talking about the equities markets, and I tend to agree because you can get a little bit more volatility out of it. And if you're a beginner swing trader, I would say definitely look at the currencies markets. Take a look at the major pairs. You're going to have a very good time trading it, because when they of course they do trend and they have great fills, and there tends to be less of these like very spiky, crazy like dips. A lot of times the equity markets, during news volatility, you'll see huge fluctuations, and that tends to be less on the currency side, because the market is just so big. It really, really takes a tremendous event to move the market significantly, right? Like it's just Forex and currencies tends to be more range bound, more steady, and you tend to get less of this crazy up and down volatility. And I think as a swing trader, that's something that you want. You want to find a nice trend. You want to just catch onto it, catch a leg of it, and then cash out, right? Like that's really what you want, nice, steady profits. Whereas if you're maybe intraday trader, you kind of want that volatility. Maybe you want to see the 4-hour or the daily candle be huge, because if you could just capture a chunk of that, you're inside the daily candle, right? So you want those candles to be big either way, and that's where you can make your bread. Whereas swing traders tend to want less of that. We don't want that like ginormous 1-day candle. Like it's probably going to mean that we've missed a trade if we weren't already in. So yeah, it just depends on what you're looking at, and I know that there are a lot of crypto traders out there, and there's exciting things coming to Hydra's crypto side as well, because we're going to be launching a lot of new crypto pairs second half of the year. We're aiming to bring at least 100 more crypto pairs to our trading platform, probably second half of this year, Q3, if not Q4. So, crypto traders can rejoice. We're bringing a lot of the more degen stuff. That's what people have been asking for. The smaller caps, the meme coins, the Trump, the Melania. If you want to trade that, like, we're bringing that stuff on. Don't you worry, degens. We got you too. We have your backs. Okay, we support everyone. Equal opportunity for all. If you want to make money trading meme coins and you're good at it, why not? If you can show a positive P&L trading whatever instrument you have, we want to be able to offer that. So there's exciting things coming up. We're developing a lot of product on in the second half of the year. We're always looking to launch better and better things, and our futures product is coming out, and I think we've taken a relatively creative approach to our futures program. It's not going to be cut and paste like the rest of the firms. I'm not going to give all the details just yet. When the futures product is launched, I think we're probably going to do a podcast episode about it, where we go through the rules, where we take you through, every single step, what it's going to take for you to get funded, what it's going to take for you to make a payout. But I think that we've taken a creative approach to it, and I think that traders are going to like it, because in our last episode, Evan, one of the points Evan talked about that I really loved, he was saying that like, hey, it feels like futures can almost be a little bit easier, because traders are, you think of it as like dollar amounts, right? Like you're more like, oh, cool, like I just need to make, $2,000 or like whatever. It almost feels a little bit gamified. Like you're not so caught up on the percentages, and because the percentages are not as large. So we've almost taken that a little bit of a step further, especially on the payout side. So I'm excited to bring this product to market, and we'll go through it when it does come out, probably looking at end of this month, and end of March, first week of April. That exact date has not been decided yet, but the product has pretty much been finalized. The team is in the final steps of bringing it live. So yeah, we're very excited to launch that, and you guys will be able to trade your dearly beloved CME based futures, NAS 100, S&P 500 for those of you future sticklers out there, Evan. But yeah, like I think
less than NQ.
NQ.
They've been formal. You know how these guys.
Yeah, and I think the cool thing is, because we are bringing this to a global audience, you know, James has not really had the opportunity being based in South Africa to even try futures, right?
Yeah.
So we're bringing this to a global audience. And for those of you that maybe have had a hard time, potentially getting accepted at all the American futures firms, fret not. Hydra is here to save the day. You will be able to
Yeah.
you will be able to experience futures trading very, very soon, and we're very excited to bring this to you. So that brings us to also the equities markets versus crypto, right? Because we've talked about currencies versus equities, and we've talked about like the differences between, let's say, swing trading them, day trading them. Let's talk a little bit about crypto versus the equities markets, because I think there's a strong correlation between the equities markets and crypto because they tend to be risk on assets, right? So if there's a lot of fiscal budget, if there's money printing, those tend to just be up and up and up. And then
Yeah.
crypto is almost like a way more volatile version of that, right? Like a totally just like unregulated Bitcoin can pump, way more than even NQ, which is probably one of, if not the most volatile equity equity market.
Yeah.
So a little bit about the crypto versus equities from my take, who it's for, who it's not for. I would say actually, if I were to choose between trading equities and trading crypto, I don't think I would choose one. I would probably day trade equities and then swing trade crypto. Right? I really don't believe in day trading crypto at all. Like maybe Bitcoin and ETH, but like this other stuff, I personally have not found success with it. Like just because of the things that I've brought up, right? Like the slippage, the liquidity. If you're trading larger accounts, it really is harder to get the fills and the execution exactly how you want it, especially if your stops are tighter. So what I would do is I would day trade the equities markets and then swing trade crypto. I think crypto can potentially yield very, very large returns for swing traders, as I've seen Cam. Like in this last bull run, I think he ran his account from $84,000 to $1 million,
Yeah. I
in
remember
the
that.
span of a
Yeah.
couple months, which was mad. And he only swing trades, right? And because if you're able to catch the upside volatility and you're able to position yourself, it tends to be like one thing runs and then like another runs, and then so every day something is pumping. Every day you can catch a move. So you got to just like be peeled for those 2, 3, 4 months when everything is ripping, and you can really, really make a ton of money swing trading because you can hold it, because you just like the percentage gains are absolutely bonkers when in crypto. You could see something go up 20, 30% in a single day. Hell, even 50% in a single day. You can see this even on some of the
It's
larger
crazy.
caps. You
Yeah.
can see things move upwards of 20, 30% in a single day. And if you're positioned properly and you hold it, over the course of hours or days, you stand to make very, very outsized return. Because even if your stop loss is, let's say, 2%, if something runs up 10%, that's a 5x return, and that a 10% gain in crypto can happen in a matter of hours, much less,
Yeah.
much less days, right? So,
Yeah.
for those of you that are familiar with the crypto market, you know exactly what I'm talking about. That's exactly what drew me in to trade crypto in the first place, because I was seeing all these like astronomical 100% pumps. Like I was like, oh, how do I get in on that? I don't know how to trade, but I know math. 100% is double my money.
Yeah.
That's what suckered me in. But I think
That
that,
was
if we were to compare crypto equity, I would say definitely swing trading crypto, day trading equities.
yeah.
Day trade the more liquid market, swing trade the more, let's say, volatile, less liquid one. Smaller positions, hold it for longer, capture more of the larger move. James, you have some thoughts about
I,
the crypto market? I know you haven't really, like, you're not, the biggest, let's say, crypto trader, but I
Hey,
know you dabble a little bit, right?
Bitcoin was my best
I
traded
know you
asset
were
in
dabbling.
January.
Yeah.
Bitcoin was my best
Yeah.
traded
So
asset in
tell me a little bit
January.
about that, because I haven't day traded crypto in God knows how long.
Yeah, I mean it's neat. I mean it moves very nicely. The only thing is I think I mean you can get these sparks on Bitcoin that can literally like in seconds like move like from like 80K to like 85K. So that has been a one or two things. So you got to be careful of. But again, like I just think I mean I agree. I think you should probably swing trade crypto and probably day trade equities. I mean you can swing trade equities too, but I think day trading equities, if you had to like put them into, rather day trade equities and swing trade crypto. I think it's probably a little bit, safe. I mean, you saw Salza. I mean, go watch Salza's thing. He made 40K swing trading crypto. you know?
Yeah, and I think like the thing about equities and the thing about stocks is because the market closes, there's actually gap risk. So you do have to take that into account when swing trading. Whereas crypto is a 24/7 market. There is no gapping. So
Yeah.
the market's always constantly updated. So you'll never get into a situation where, let's say, it gaps, you have a stop loss, it gaps over the weekend and just completely blows up your account. Like that's always a risk when you trade markets that close. You just don't know when that could potentially happen. Gap ups and gap downs happen all the time in equities markets, especially trading stocks, right? Like that's something that you really have to watch out for. And I fully understand why futures firms don't allow kind of overnight or even weekend holding, because you can get these gap ups and it's very, very difficult for a firm to manage risk if they have tons and tons of open positions over the weekends and stuff like that. Something gaps up, like they could
Yeah.
be looking at a massive hole, in their balance sheet just from an unexpected event or something happening. So you do have to be aware. That's also another reason. That's potentially a downside of swing trading equities. Is like, yeah, sure, gap ups and down can happen in your favor, but they can also blow up your account like without you intending to, because your stop loss is not going to fill if there's a gap.
Sure.
It's just going to fill at open, and you could lose way more than you anticipated. So that is a
Yeah.
risk that you have to take into account when swing trading equities, which is why I'm saying crypto is actually really nice to swing trade, because it's a 24/7 market. It never closes. Your stops are always going to fill at exactly whatever price you decide to close it at. You can always open a position. You can always close a position, even if it's Sunday, even if it's Saturday, even if it's a public holiday.
Yep.
It's just going on forever. So that's definitely a big benefit of trading crypto for me. So, maybe
Sure.
even for those of you that are maybe weekend warriors that want to trade on the weekends only, look at
Yeah.
crypto, right? Like look at trading crypto. Maybe you're swing trading, maybe you're looking at entering positions on the weekend, or you have more time on the charts. That's how I would go.
Weekend warrior. Yeah, like
Yeah.
Diwa in his golf. He's a weekend warrior golfer. Ah!
A weekend warrior. I'm a daily warrior,
Ah,
daily grinder on the golf game, all with the goal of beating James straight up end of the year. That's the goal, bro. Beating James straight up end of the year, seeing some tears roll out from his eyes.
ah!
Anyway, guys, we
Oh
appreciate you
God.
tuning in for today's episode. We will be back for another one. Potentially next episode, we'll be running through our futures plans with you guys. And James is also on the verge of passing yet another challenge. So if by the next episode he's already passed, we will run through the stats with you on his second funded account. And that's it. Thanks for tuning in. We'll see you in the next one. Peace.
Yes, sir.